Hey guys, this is O3 from the Hemisphere Underground group, but you already know that. I'm back for another Gear 30 Trading Day review video. Let's get into it. Okay, cool. We start on a weekly to get like the overall high time frame bias. Where's price action trying to go on the bigger picture? See, X. It's not necessarily confusing, but it's okay. Right, let's start on the monthly. Okay, we see we've been coming. But yeah, we're not gonna obsess ourselves too much with what's going on in the high time frame. Let me just charge my laptop real quick. Mm. Yeah, so price been breaking structure to the top side, as we see. So we know that we're overall bullish on the monthly. So expecting price action to come to this area here. And this one here. So let's move on to the weekly to at least refine these zones. We can refine it to this last order block here. And then same thing on this end, the spectrum here. Okay, now since after all we know the price, well, we're not looking forward, we're just getting an overall view of the market. So yeah, price came back into an order block, so we are expecting bullish price action as we're seeing here. Damn, it's been a while since I used trading view. But yeah, we're expecting bullish price action from here and so on. Yeah. So yeah, go to the daily and see how it looks. Let me just push this to the side so it doesn't interrupt with anything we'll mark out on the 4 hour. Okay, so on the daily we can see that we've been coming bearish into this monthly POI, point of interest. But yeah, so since after all price action is going bearish, still we're still trying to trade it bearish, even though we know that market structure might want to shift bullish. Yeah. Um, so we have this POI here, and we have another one here. I'll explain the strategy at the end of the video if I remember. But yeah, if you understand the strategy already, you should know where I'm going with this. So yeah, we're, we were approaching the daily as time progressed. So yeah, basically I'm trying to review whatever's the price action that's within these two separate days. But yeah, so the move up to those areas, price action has been bullish on the 4 hour. So we were anticipating bullish price action, and we continue price action and up as it created higher highs and higher lows. Yep. Then yeah, when PA was right about here, I was expecting price to come to this order block and react off of it to continue the bullish price action. But as you can see, it continued without coming back this far. And it's the same thing. It's the exact same case when it came to the following day. We're expecting price action to come back to this point of interest here. Oh, and in this case, it did come back, tapped us in, and then just continue to the top side. But yeah. Okay, now let's look for the first gap. Okay, yeah. Now, on the previous day, this is for later on. On the previous day, once the clock struck 11 or 12, let's check. 9. It was not making sense. But yeah. Wow. Okay. Once the market opened for Germany 30, here are the POIs we were interested in. Since after all we see the price is swinging to the top side, we can mark out all of our swings to the top sides just so that we can have a higher time frame view of what's going on. So we created a high there. There's our low. Swung swung and created a higher low. Then it swung to the top side, creating a higher high, higher low. We're anticipating that this is more or less the area of our swing high, but we can't mark it out because it hasn't been confirmed. We could assume that it is due to this break to the downside, in which we're anticipating bearish price action. But then again, momentum is bullish from the monthly, so we're anticipating that price action would still blow through these levels. But yeah, then again, we're focused here. So this is where we were. Price had just broken a previous high. Then what I do is mark out all of the order blocks that are within this area. So we first have the extreme, which reacted, creating this order block. It never got retested because here it came close, but it didn't necessarily touch it. Then we continue. Same thing the whole time. I think this one could be moved to the wick. Fractal structure is where price action gets you, whereas you don't see. But yeah, we have our mini breaks. Oh yeah, the reason why I'm picking these order blocks, it might look random, but I'm looking at a setup of, whereas you have the first block and the second block, then you have the third one. This is a rough drawing, but yeah, let's see. This is taking too much time unnecessarily, but yeah, once price creates a high, the next candle comes in lower, and then after that it breaks that high. We count that as a fractal break of structure. So that's essentially what we're looking for here. Every instance where this has occurred. So you can see we had a break here to the top side. So that means that we're taking this POI. Now it's the same logic over and over and over and over and over. Moving this way. So this one could be the one that that had a reaction. Yikes. Where's my English going? But yeah. Same thing over and over and over and over and over and over again. And then the only thing that'll set us apart is what you call it, is the confirmation. So now these are all of the areas that we're looking for from the previous day. And then as we see, price action started off with breaking this structure here. The first moves of the day. It started off by breaking this structure, creating this order block. Now, since after all, we need such a minuscule move to catch our move. I would be shorting. I would be playing both pro trend and counter trend within um within this market. So here, price action continues. It breaks even lower, having us do this exact same process right here. Reacted off of this one, creating this one here. Then we take it to the right, all the way. And after that, we had another break here, which brought us to this, which got retested on this POI. There we go. Now let's continue with price action. Price action broke here, invalidating this one, but we didn't lose anything because we didn't enter. Now, in such scenarios, whereas we have an order block that has been reacted off of, we take the most recent one here, but we allow price action to wick out instead of just completely breaking the overall move. I don't know how to put it into words. Maybe over time I will, but yeah, we're allowing price action to wick out as it did here because of these. So yeah, price action came, invalidated this zone, meaning that we had no opportunities to enter, created structure, broke structure to the downside, creating all of these zones that we want to be taking price action down to, right? So now let's follow price action. After breaking here, we see that price action came to this zone here and then impulsed down. So that means that we do have an opportunity to actually look into the 1 minute and see if there were any trades we could take. And that's exactly what we'll do. Which is here. Now we were anticipating for, first things first, the internal structure to break to the downside for us to actually continue bearish. Now in this situation, what we see is that price action did come. It came into this POI and then only shifted the internal price action bearish after it broke here. But the problem with this is that on the 15 minute after it broke, wait, why am I going to the 5? Yikes. But yeah, immediately after it switched immediately after it switched bearish, confirming our bias, it just broke this structure. So there wasn't that much of an opportunity that we could enter on. Now that entire POI has been left. We stretch it like this, and then immediately after we were interested in this position and had no opportunity to enter, price came into these two zones, invalidating the first one and invalidating the second one. But because we have price action in this type of structure, we know that it's allowed to wick out. So this one got invalidated and so did this one. So this is the actual point in time whereas we were interested in what price action is doing, and we're going to the 1 minute, and let's see, it's right here. Now we wait for this break. prices broke into the top side, leaving all of these POIs. Now, this is where we set our orders and calculate our opportunity cost. For us to actually look, after price breaks the internal structure to the top side, we want to be doing the exact same thing we've been doing, but here we're placing orders. So the opportunity cost of catching the one trade within, or the one or two trades within this area that are gonna give us our high RR trade, is by these areas, if I can say it like that. Keep on moving, keep on moving, keep on moving to the downside, keep on moving. Let's see, we have this one. Could finesse this and make it one. Yo, yikes. My bad, excuse me. And yeah. So the opportunity cost of this trade is 1, 2, 3, 4, 5 hour. So that means that if we were completely wrong about this zone after placing all of these orders, if price just came instinctively down like that and stopped us out of all of these positions, we would be down 5 hour. 1, 2, 3, 4, 5. Yeah, 5 hour. Now let's see the actual results. We trade off of the 50% level, so this is the one that got retested. See. Oh damn, let me just make it black. The middle line should be black as well. Why is it doing this? Okay, cool. Chill. So yeah, here's my position. I set a singular take profit. Well, my trade management is a little bit complicated, but simplify. Let me explain it simply in simple terms. I place my order just like this. Yikes. We can't see anything. Let me just make it a little bit. Yeah, there we go. Okay. I place my order slightly below the bottom of this POI, and then put my entry slightly above the entry, the 50% level. So my singular take profit is at a 16R, meaning that we wouldn't catch. Wait, let's see, 16, 16, 16, 16, 16, 16. There we go. So that means that this is, why is trading view being unnecessarily difficult? But yeah, we needed a 50, yeah, I would say 50-point move to get to our take profit. But if price reaches 12R, we move our stop loss to a 5-hour target, meaning that although we could have made, let's see, although we could have made 14R out of this entire trade, we only captured 5. So our opportunity cost was 5 hour completely, but it only cost us 1 hour, since after all that's where we got our loss. And since after all price action here is still below this line, price action in this area here is still below this line, we can still look for entry opportunities for breaks to the top side. So we see price action broke to the top side here, meaning that we can also risk money on this position here. Let me just move this to the side, yeah, and on this position here. So in our favor, it's only this position that got respected, and it would have cost us another 1 hour to get into this position. And let's see how much R. we could have captured on this. Let's see. 10R. 10R. Okay, yeah, this is we have 5 hour from this trade. We're down 2R. Let me write it down here. It's negative 1, 2, negative 2R. Damn. Settings. Damn. The reason why everything is in white is because I was in dark mode. And then we plus 5. Plus 5R. So here, the trade gave us an opportunity to catch a 10R, but unfortunately for us, I think this has ran to a loss, or maybe we would have closed it somewhere once we got impatient with it. Maybe somewhere here. Psychology is something else to deal with. But yes, the opportunity cost of this trade was 3R, because this one was a loss, this one was a loss, and then after this entry here is also considered a loss, since after all it never reached 12R. So I would say negative 3R. And then let's see. Overall, we're up 2R so far. Yikes. 2R. Why? 2R so far. We're up 2R at this point in time, and we still haven't concluded. Let's see, it's still below, price action is still below here. So let's see. No entry, opportunity cost. We down 1 hour here as well. No entry here. Break to the top side. And then here's another entry that would have resulted in a loss as well. Why am I using the wrong tools either way? But yeah, same shit. Oh, this is a extra. This. Oh yeah, no, this is a precise position. 10R. Ah, I doubt I would have let this. Okay, yeah. Here are the longs that we caught. Um, cost us 1, 2, 3R with this one. Wait, no, 4. Negative 4R. Then after that, we're completely plus 5R on this one. This one resulted in a loss, so that means that this one resulted in a loss as well. Minus 5R. Okay, that means we're completely break even. Break even on our account. Then let's move back to the 15-minute. Throughout all of these moves here, it was only Control Z. There we go. It was only from here to here. That was the entire move. And then we moved into a POI, meaning that from this POI here, we're looking into shorting if it shifts. But yeah, it shifted, and we're looking for everything above this to trade. So that means that the last position that we would leave is here. Then in this case, I think the opportunity cost is absolutely every position we got into. Hey, hey, stop out. Let's see. Another stop out. Oh, I didn't select the tool. Wow, very dumb of me. No entry. Well, this must have been tough. So this is a situation where our entire opportunity cost would have been our stop out. So that means that we'd be break even on pursuing this position. Based off of our theory, this is our theoretical edge in the market. So we'd be down 4R because price vased us here, went down, broke here. Wow, being unnecessarily difficult. But yeah, it vased us, came back, broke this area, meaning that on the 15-minute we're expecting another point of interest here, meaning that we're out of all of these positions, meaning that we're down 4R. Negative 4R. 15. Let's see. Where were we? We were somewhere around here. But yeah. Oh, it actually wicked it. Oh, now that means that this position was a negative 5. So we're down 5R on the account from pursuing this entire trading day. And then fortunately for us, price came back into one of the areas, one of the point of interests in these areas. I will just refine it because now that we know where price action reacted off of and from which POI, it's much easier for us to actually refine it now. But beforehand, we just take it as that, as what it is. But yeah, we see price reacted off of there. Let's go back to the 1 minute, see where we would have had the opportunity of entering. Now this is, let's see, double top. This is where price last broke to the top side. So this is the internal structure we're waiting to break. Price came down, went back, reacted off of an order block here, and then broke this entire structure, meaning that we're interested in shorting from this area onwards. So let's see. We have our opportunity cost here. But since after we didn't get stopped out on any of them, our opportunity cost didn't cost us anything, to be honest. Now, where we should be focusing is here. Our first break was here. Our first break was here. Meaning that this is our point of interest and we extend it there. Then I think this is the only point of interest that we could have shorted on, meaning then we're down 1 hour for pursuing this. I'm feeling negative 1 hour here. But yeah, hey, now our chart is crowded. Let me just delete a few things. Well, let me just delete most of the things that are here so that we can see price action clearer. Now, the mitigation of here resulted resulted in a breakout structure here, meaning that we are safe to assume that price might want to realign bullish, meaning that we're waiting for an entry opportunity here. We have this area where we can look for opportunities. Then after that, we had this break as well. So this one actually could have, yeah, I think we took a few more losses in here before we actually won. If we do win, if we do catch a win. Sure. We need price to break bullish. Then it needs to break this structure here. It only broke there, meaning that we got swept out. We got swept out of one. Yikes. I think I could force this to be, oh yeah, no, this is actually one position. One position here. One. And we could force this to be another singular position here. Let me just take this one here and stretch it out. And then after that, we'd want longs off of this as well. And there's our break, meaning that everything below, see, break here. We have this one here. I think we could also force this to be one position as well. That means that we got stopped out once, twice, 3 times, 4 times before we actually caught something in these areas. But unfortunately for us, it's another stop out position because it didn't go that far. And price comes into this one, breaks to the top side. There we go. Oh yeah, I'm skipping a step. 1, 2, 3, 4, 5. Down 5R. Because technically we would say I'm thinking this position got tapped in. Let's see. Yep, it never made it to the 50% level. We didn't get tapped in. Let's see. Looking for the breaks to the top side. Right. Price breaks to the top side. We have this. We wanna be longing from here as well. And we wanna long from here as well. So now we get stopped out of this one. Don't get tapped into this one. Then price actually just continues. Makes us feel stupid. Ja. 1, 2, 3. Yes, Auntie. Now negative 3R. And then we get to this point. Where's price action? Continues up. Since after all it tapped into this bigger POI here. Here. We've had our negative 8R. Then after that, we have this break to the top side, meaning that from here to here, we're looking for longs. First position here, second position there. if we got swept again, the opportunity cost for catching this one trade. Wait, no, we're not actually supposed to be taking these ones at the downside, since after we're trading from here. The opportunity cost if we got swept was 3R, and then fortunately for us, we caught our 16R. Then boom. After all of those losses, we've only secured one win. And then our win gave us our 16R. See, 16R. That's how much we took from it. Then we get our plus 16. Okay. Then we go to the 15-minute check. Oh yeah, that was the last position we could have gotten into on that day. So for the entire day, damn, I deleted everything. Okay, it was a break even this side. Let's try and remember. Here it didn't come to our POI here, so it was no entry here. It broke to the top side, came into here, but never gave us an entry. And then we came into this area here, which gave us first our break even. Let me just highlight that area. Where was it? See, break of structure to the top side. I think this one. Yeah. And then after me, yeah, there's our wick to the downside. Price came, went up, gave us our negative 5R plus 5R from all of those trades. And then after that, Ntela invalidated us. We were break even on the trades here. Then we're at negative 5R, negative 3R, which gives us a negative 8. And then we got our plus 16 here the end of our day, at the end of the day. So this was the opportunities of the entire day. Negative 8, negative 8R, okay, and then plus 16, meaning that we're up 8R from the previous day. Yikes. We're up 8R from the previous day, and then after that we start off the next day. Price breaks to the price breaks structure to the top side here as the first break of the day, excluding the fact that price broke the previous day's high. Like within the first few hours, that price action dollar started moving. So we went along. From here. Now, since after all, we're trying along, but there's like nothing. There's no order block here. We're not allowed to be looking for like to allow price to wick out. So in this case, price wicked out and then continued to the top side. But unfortunately for us, in terms of the height of this wick, with the height of this wick, we know that for the first half of this entire move, price never gave us an entry. We can see with the impulse of this wick. And then after that, we're looking for another entry here. Well, we're looking for another entry opportunity here. Price doesn't give us. It just breaks to the top side. Breaking to the top side. Then after that, failed to break to the top side again. Then break all of these broke all of these lows. We didn't get any change of character on the 1 minute that we would use to enter. But we see that price broke to the downside, and then we have these two point of interests, and I think that's about it. From the previous day, from the previous day's low, what point of interest would we be interested in? Wait, why did? Oh yeah, from the 4 hour. Okay, it's fine. On the 4 hour, we're expecting price action to be coming into this area and then continuing bullish, of which price action did that, but it didn't come into a 15-minute point of interest that we could have been scoping. Meaning that what we're anticipating for price to do when it comes to what you might call it, when it comes into this 4 hour point of interest, is that we're expecting an internal change of character to the top side first before we actually um considering any bullish behavior as price continues. Lower low, lower high, lower low, and then it breaks the previous lower low, creating a higher low. I mean a higher high. Yeah, I hope what I'm saying makes sense. But yeah, then we have our point of interest here. And price continues up. So that's what we'd be anticipating. And of which we had that happen. Delete. We had this happen right here. Broke to the top side there. Meaning that for today, as price action continues moving, we're expecting maybe a little bit of something in here. A reaction in here, which gave us this, which now gives us this. Then we'll take this straight because price has not broken structures yet. The most important structure here is this one here. So yeah, what we're anticipating right now is just bullish price action. Price broke this structure. We should actually be entering trades, but our spread is terrible. Let me check what the spread is like. Let me check what the spread is like on Germany 30 with my prop firm. The spread is 50 right now, so yeah, the market is not yet ready for us to be actually looking for any opportunities. But yeah, we're anticipating the break of this structure into these areas here, whereas we might be looking for shorts as well, but they're very low probability since after all price has been bullish. But yeah, since after all you viewed the logic, this previous day, the only time we could actually look for entries is this area here, whereas we got something out of it, but I don't think price changed character to the downside, insinuating anything for us to trade. Let's see. The last break to the top side was here, meaning that we want price to break this area here for us to consider ourselves bearish, right? But we saw that in the move from here to here, in this impulse here, we see that there's a separate move here giving us another area for like to be interested in shorts. So yeah, price came in. Wait, no, let's go. Let's go from the beginning. Price came in, broke to the top side, so we're waiting for a break here. And unfortunately we don't get that. Continues. We're anticipating a break here. We don't have that. And then price comes back. Maybe it looks like it's gonna come and break here so that we can be interested in shorts, and then just breaks to the top side. But fortunately for us, it gave us the opportunity to get into such trades. So let's go over the opportunity cost here. Wow, did I not select that block? I think I should just keep it selected. Lock. Okay, that was useless. Okay, the lock doesn't work. Let's see. Oh yeah, here. Blink and you'll miss it. Here. Let's see. And we have this one here, the last one. Should brought us here. So I think I could force this to be one position with a stop loss here at the overall high. It could look something like this. Here, this is a position on its own. This is a position. Wait, no, these two can be forced to be one position. And then yeah, these remain separate, meaning that the opportunity cost of this trade would have been 1, 2, 3, 4, 5R. And then yeah, we're noticing a pattern, small as 5R almost every time. But yeah, around about there. We're down 4R because price comes back, takes us out, takes us out, takes us out, takes us out. And then when it's about to take us out on this one, that's when we actually get our trading opportunity. So that means that here we'll be down 4R, and then the last trade, we're down 4R, and then the last trade that is what the trade that we were anticipating to tap us in is the one that actually tapped us in. The most kind of again probabilistic trade. See short position, just entry here, just here, and then stop loss just above here. And then obviously it's gonna be a little bit different when we're counting for spread. But yeah, 16R. Let's calculate. Where's our 16R? 16R, 16R, 16R. Okay, there's a position whereas we were able to capture 16R at the cost of, it's not completely 4R, because we would still want to be shorting here, since after all, it's above the break line. So we'd want to be shorting here. We'd want to be shorting after this structure break here. We'd want to be shorting, let's see, with reference. Let me just put a horizontal line there. Let me put a horizontal ray here. Oh, perfect. Okay, cool. We have our horizontal ray, so we're seeing the positions that we want to enter in. We're taking the short at this wick. We could have forced it to look like something in here. This would make the position bigger. What would make it smaller? I think this wick made it small enough. Here's our position. Here's another one. Here as well. Did this break? No. So it's negative 4R on this side. It's negative 1, 2, 3. It's negative 3R on this side. Negative 3R here. And then it's only this position that got respected. So we'll just take this position. Oh yeah. Let's just But yeah. Here's our entry, stop loss here. Then let's look for 16R. Not even close. Does it reach 12 though? Not even close. So we can't claim a 5R from this. It's negative 3, negative 4R, negative 3R. Yeah, we down 7R. But I doubt we just let this get back to dying. But yeah, in terms of the strategy, we down negative 8R. Meaning that the previous day would be up 8R, and then this day would be down 8R. So this is a call for concern. What should we change? I think we should stop taking counter trend trades because they don't have money. They're the ones that caused our losses, most of our losses. This was a pro trend trade. Oh yeah, no, it gave us a shit ton of losses. And then this counter trend, the counter trend trade here also gave us losses from here to here. And then it's only the pro trend that gave us the moves that we wanted. So I'm thinking I should just cut out the counter trend moves. Trend is bullish for now, then we should just stick to the pro trend moves. Okay, yeah, that's about it for today. This was supposed to be two. Oh wait, no. Was this the first? Oh no, this is the second day. I missed. Did we miss this? Was it allowed to wake out? No, it wasn't. So yeah, we couldn't. We can't claim that we were in these positions as well. Wasn't allowed to wake out. Let's see. Break to the top side. This is a position that we were not allowed to trade based off of our criteria. And yeah, maybe I should just redefine the criteria to see why am I not entering in these positions, because they're the ones with money. Let's see. Into the top side. No, this is a no tap in. Why is it doing this to me? Oh, that means I have two of them here. Let's see. Wow. But yeah, I thought this is an entry. Let's check. Oh wait, no, yeah, it is an entry. It's a nice 16R. So yeah, notes. Over the course of 2 days, we would have taken way too many trades. Over the course of 2 days, we took way too many trades. The counter trend trades were not in our favor, and yeah, they actually cost us money this time, because we were up 8R on this day, and now we're down 8R. So yeah, as a result, I should just I think I should just be a pro trend trader, because counter trend is not my is not my cup of tea. And then another thing that might mess with the results and have us deviate from this is the fact that I would not let three positions that were in profit run to a loss. Like I think it was here. Since after all we deleted a lot of the information, we can't really see, and I'm very lazy to go back and go through all of that, since after all this video is long enough. But yeah, notes: we should stop taking counter trend trades. We're just pro trend traders, since after all it's costing us R. And yeah, start to manage our psychology so that our edge surpasses us every time. Yeah, I think that's about it. Thank you for tuning in. If you made it this far, oh yeah, I said I'm gonna explain my strategy at the end of the video. Okay, since after all we know the basics, price moves from higher high, creates higher highs and higher lows as it moves. This is an ideal scenario of what we expect price action to move as, right? But as we know, price action moves like this, but it doesn't move like this precisely. Okay, it's the understanding of this, and then it's the understanding of Elliott wave as well, whereas we're getting our 5 impulses to the top side, as well as 3 corrections to the downside if price action is inclined to go a certain direction, right? So now we can see that price action does actually move like this in a way, but it's not exactly there, right? Now we pair that with an understanding of structure as it is. We know that structure moves okay, yeah. I don't know how to explain this properly. For a better explanation, you should go to the photon trading mentorship. I'll have it in the description, as well as Mentafex for the rest of the for a better explanation of what I'm explaining to you. But yeah, you have structure moving like this, and then within that structure, you have internal structure that moves like this, and then continues to the top side. Let me just give it another color. Orange, it's fine. And then, yikes, what the hell did I do? Okay, I went to another one. Shift space. Where was it? Yeah, I was here. And then within this swing structure, the orange is the internal structure. And then we have our fractal structure, which is the one in between the internal structure. Let's go like that. Nice change of character. Wyckoff distribution, accumulation if you're a Wyckoff trader. But I think you get the gist. Let me just leave it like that. Change this one to red. Now, if we take away the foundation, we get somewhat a representation of how price action actually moves. Whereas we have our swing structure and our internal structure, but it is represented in the form of our internal structure. Because we have this break here, but this break here does not overpower this one here, because we can get our invalidated breaks to the downside here. Then after more, we continue, get our change of character to the top side. That's going to have us having positions that we can take here, and so on. Like, this is a breakdown of how I understand price action. And there's also a concept of the three box setup that Mentafex preaches about, whereas you have a previous structure and then you have an impulse. Now that impulse, the job of that impulse is to break the previous structure, right? And then we're expecting it to come back to the order block that created this impulse to the top side to react, which is where we come in. Come, get our change of character, we enter, and then we continue price action to the top side. So this is what we consistently find in price action. This is what we want. This is the price action that we're interested in. And then we only place ourselves into positions after this occurs. After. And then if you go back to the chart, you can basically see all of that. We have our swing structure. We have our previous structure that represents the three box. We have our impulse. I'm not a legend at identifying the Elliott wave, but I can show I can explain something that would show you that I have a general idea and understanding of how it works. We have our 5 impulses to the top side. This might not even be a perfect textbook scenario, but yeah. Here, and then there's our impulse representing the five move impulse, the Elliott wave, 5-leg impulse, and then after that we have our three dying our corrective phase, let me say it like that, whereas price does that, and then I would say this is a double correction, maybe triple, the second one, and then after that we have 1, 2, 3. Yeah, this is a triple correction. But I think I'm wrong. But yeah, we have Elliott wave in the picture. And then here's the change of character that we're anticipating. Price comes down. Wow, why is this thing so unnecessarily difficult? I should switch off the magnet. Create structure, changes character to the top side, reacts off of a POI, and then continues. Let me just correct this one. Now, if you look at it this way, here's our break. Here's our break to the top side, which is where, as I said, we're interested in positioning ourselves. Wow. But yeah, the way I trade is basically an understanding of all of these. Catch you on the next episode. Thank you for tuning in. Thank you for making it this far. Please like, comment, and subscribe. We'd appreciate to have you.